Welcome back, folks. In our previous videos, we have learned about the valid inducement, valid breakup structure, how to find a valid inducement, and how to mark a valid breakup structures. That was the point of discussion in our previous videos. What is the swing and how to mark a valid swing? Now, some people mark the swing if the market is going upward. They will say if the left side of the point has been taken and a candle body closed above that, as I have shown in my previous video, that will be a swing point. But we have understood, we have learned, valid swing point is not what we think. There are certain rules and characteristics to mark a swing point, like higher lows, higher highs, lower lows, and lower highs. So now the important part is how we know this is a break of structure, how we know this is a market structure shift, how we know it's a swing high or swing low, higher high, higher low, lower high, lower low. How do we know? So the importance of all this will become only when you know the structure mapping. If you don't know how to mark the structure, then you cannot decide or you cannot mark where is the swing high and where is the swing low. So today we will know the structure mapping, how to mark or how to do the structure mapping in a right way. Now today we are going to have a look the market structure shift, or you can call it a change of character. How we look into this? Here we have to squeeze the chart, or you can say zoom out, and we have to see the lowest possible point. And when we see a clear path, like the market was coming all the way down and then it stopped somewhere and then start going opposite side, so that we call it a point. So we will mark that point as our base point. As you can see, I marked it with the green dot. So this is my lowest point. If you look at left side of this point, you will see the price was falling down, and if you see on the right side of the point, you will see price is going upward. So that is our reference point. Now if we look at this point, at this bottom point, where is our inducement? So our inducement will be right on the left side. So why I draw this green line? Because this was the last structure, last break of structure that happened. And after this point, if we see, if we expect the market to continue the trend, so it has to break another structure or make another swing. But you see, I dropped a red circle, and according to that red circle, I marked a red line. That means that was the inducement level for that red point. The market has taken the inducement, and then market came down the red reference point. So that means that is the valid swing and that is the valid break of structure. Now that between these 2 points, red and green, between these 2 points, our highest point, I marked it as a lower high, and the red circle I marked it as a lower low, and the green circle becomes a lower low as well. So here I marked the lower low. Now, according to our recent low point, where I marked a lower low, where is the inducement level? As a rule of thumb, always we have to find a valid inducement on the left side. Now that is our inducement level. I marked it. Now if a full body candle body close above our lower high point, that means an early indication of market reversal. That's what we have learned in our previous video, that what is the early indication, not a confirmation but an early indication of market reversal. Since at this moment the price has taken the liquidity or inducement, but it has not closed above our swing point, so we have to look at the lower high. We will draw a line there, and then a candle body must close above our swing high, that is lower high. Then we can call it a market structure shift, or you can call it a change of character. So if I just draw the line here, if you see, if a market close above, so then we can see now market is intending to change its direction. So this becomes our market structure shift. So like, we don't know if it could be a market structure shift, but how we will get the confirmation if it is a market structure shift or it's going to be another break of structure. So then what we have to do, we have to wait to form another high after this breakout. As you can see, market one leg gone up, and then that is our highest point. So what we have to do, we have to wait the market to make an inducement. Now because market is moving upward, we have to find an inducement on the lower side, on the left side, lower left side. You see, market has taken the liquidity from that red point. The red circle is our reference point, and on the left side I draw a black line, that is our inducement level. Market has taken that liquidity or taken the inducement and then close above the reference point, that is the red circle. So that means this is our valid break of structure. Now what we have to do, we have to wait for market to make an inducement and then to take it, and then it means our structure is confirmed, that market structure has been shifted. So this was a market structure shift. It's not a blindly marking, it's a valid marking that we mark based on valid high and low swings. If you don't know how to mark a valid swing highs or valid swing lows, then you cannot mark a valid market structure shift. That's the key of this marking. So this was like, you can do you can do this marking on any time frame, that doesn't matter, but this was for a major time frame. If something is happening in between, then of course you can go for the smaller time frame, and then you can do the marking for the smaller time frame, and you can find a counter trend trade. So I hope it makes sense. I was able to explain what is the market structure shift and how to identify a valid market structure shift, and how, when and how to confirm is it really going to be a valid market structure shift, or it's just going to be a trap or another break of structure.